Welcome back, everybody, to the weekend show. I'll be breaking down the stock market. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely consider subscribing. And now, let's get right into the market. All right, so welcome back once again, guys. And you can see the war definitely taking another turn. And now that we're attacking back and forth, a lot of things happening in the oil recently rising. With rising oil, what happened to S&P and Nasdaq on Friday? You can see Dow was down 0.77%. You got Nasdaq going down 1.40%, S&P down 1%, Russell going down 0.5%, advancing we got 34.2 declining 62% almost for the day. So that is a massive decline on Friday. 11 sectors that makes up S&P 500. You can see energy led the way on top, and week to date also energy was up, I think, almost 5%, and technology was down pretty big. And on Friday, everything else actually went red except energy names, which they were up over 1% on the day. And you can see it right here on stock market map what's happening. Energy names and pretty much a lot of red pockets except healthcare names like Eli Lilly, J&J, some of the names from healthcare and energy. These are rising. The big names took a big hit. Nvidia, Microsoft. You can see right here some of these memory chips names. And then Apple was flat. Google, Meta was down also. Now, when you look at fear and greed index, we're back on fear 37. Uh, Market sentiment, you can see almost 45% are bullish on the market, 22.2% are neutral, 32.9% are bearish, and we have lots of earnings coming up this week. Starting with some of the big names like GM, 3M, then we have Tesla on Wednesday after closing. We got Google, we got ServiceNow, IBM, and then we also have Intel on Thursday. And a lot of these earnings are going to move the market. So next week there is going to be lots of volatility here, and we got to be prepared for it. So let's get right into it. On SPY ETF, it's down 1% on Friday, and we were not able to go back up to fill the gap right here at 748. So going into this week, we have a 13 plus dollar expected move, plus or minus. And I mean, that is a pretty big move for the week. We got a bunch of earnings coming out that's going to move the market. So going into Monday session, if we can open over these two moving averages, you can see we did close below the 50 and slightly below the 20-day moving average, which is at 745. So right about 745. If we can actually get over that, we might be able to close the gap right here at 748. There is also resistance right here, right about 749.55 right here. And then we can move back up towards that 755 range into previous all-time highs. Now, if this is going to take place where things are going to just fall apart and we're going to see more, a rotation in the market and possibly the biggest factor with the S&P, some of these financial names that are really high, they come down. That's going to put pressure on the S&P. So watch out. I mean, this level, if we cannot recapture right here, right about 744, 745, then I would expect more downside, possibly into weekly expected move somewhere around here, which is at 732, 733, and maybe even into the lower band. That's what we saw with Qs. We'll get to that in a minute, all the way down to 730. That is the expected move to the downside, and that can take place totally this week here on S&P if we were not able to go back up, fill the gap, and possibly hold right here 745 as a support. So keep an eye on this. This is something that is developing as of Friday. We had this gap down, and bears, they were really strong. They kept it down. Bulls, they were not able to go back up to close that gap here on SPY. So that is something to watch going into this upcoming Monday. And definitely, bears, they have an edge here on the S&P 500. On triple Q, it's down 1.5%, and you can see it right on my screen. Again, we were not able to go back up to close the gap completely. We had this wedge type of pattern. We were just ping ponging back and forth, and finally we saw a breakdown. Now, some cases where these breakdown actually happens, where these are pretty much fake. But given the fact that this thing, came off it was down 2% on Friday at one point. You can see it came down to 687. That is a support level. Right here, we came down, we went back up, and again, we found support. But I think in the short term, we had a decent pullback. We might be, just able to go down a little bit more to close these two gaps 683, 675, 76 right here. That's totally possible within the range where it's trading right now. So going into Monday session to the downside, you want to watch closely 687. Underneath that, there's going to be more downside down to 680 to 77 and maybe even into this gap 676.73. To the upside, we need to get over 700. If that happens, we can trade over 700. We might be able to fill the gap, and from there we can talk about 709 and possibly even higher on Qs. All right, so with recent volatility here in this market, this is the right time, guys. And we got so many trade ideas. If you're really serious about trading and you want to do this full time, head over to Patreon, and that link will be down below in the description for you guys. And if you go for annual membership, you do save some money, you get 20% off. On Dow Jones, it's down 0.74%. So this is also coming down quite a bit. If you look at my screen, 532.54 all-time high, and now down to 520. So if this thing pulls back all the way down to that 517 area and support does not hold, which you can see right here, previous rejection now will act as a support, then this thing will likely to come down all the way down to 514, lower Bollinger Band, maybe even touch 50 SMA, which is at 512, and that is going to be a lot more downside from where it's trading as of right now. And who knows, maybe even we come all the way down to previous all-time highs to retest that. But Dow's still looking a little bit more stronger than S&P and Nasdaq. So if this thing rises back up and gets over the 20-day, which is at 522.56 as of right now, and gets over also 524, then we're heading back up to all-time highs once again here on Dow. And it doesn't look like that this one is going to have that big correction as of right now. So we'll have to keep an eye on this going into next week. On IWM, it's down 0.5%. So a couple of things don't line up with IWM. And that is just my thoughts here that, if we have some sort of a rate hike coming up, next year or end of the year, why is IWM going up to all-time highs and no significant selling? I mean, you can see, it came off only a few bucks, but you can see time and time, past couple of months, we had this consolidation, we had a breakout. We came back, retested, we had another breakout, came back, retested, another breakout, came back, retested, another breakout, and now we're just retesting. And so far, guys, look at this, 292.88 holding as of Friday's closing. So that's previous all-time high. Right here, you can see rejections multiple times. We're coming back down to that support area, and so far that's holding. Now, if that gives up, we can possibly come down to the 50-day, which is at 290. Underneath that, 287.49, and then we can talk about there is the potential of a bigger pullback that we're going to see here on IWM. Now, if this rises back up and gets over 296.80, which we failed on Friday and day before at the 20-day, then watch out for a move back up to all-time highs, which is going to be over 300. On VIX, it was up over 12% on Friday. It's a massive rally, and it was coming because it was trading really low, right around $15, $16, and now you can see it got over 18 bucks. So as long as VIX remains over 18, you just got to be careful here in this market. You can't just go and try to buy every dip. If this thing remains over 18, I would expect to see possibly 20 plus here on VIX, and then maybe we get a nice juicy dip here in this market. But if this thing comes down and fades again underneath 18, watch out for the support at the 50-day here around 17.29, and below that we could be going lower down to that 16 $15 once again, and this is just going to be a dead cat bounce on VIX. So far you can see last couple of months, we had spikes, but it didn't last too long, right? Unlike before, when you look at right here, It lasted for quite some time. But these, spikes, they only lasted for like two, three, two, maybe the most cases, 4 days, and then it faded. So just because this thing is rising does not mean that we're just gonna, crash and burn and go down to zero. We just gotta be aware of, where VIX is trading right now, which is over 18 bucks. So the dollar is pretty flat on Friday, and you can see it's flagging right here. It does not mean that it's going to break out and go to all-time high or anything, but you can see when dollar does this, just consolidation and then breaks out, that's going to put pressure on the S&P 500. And so far, it's holding over 100. That is technically bullish here on dollar. And if this thing breaks over 101, I would say watch out here. Dollar could be going up even more, and that's going to bring down the S&P 500. And that is all I have for you guys in this video. I'll definitely keep you guys updated.